Hi, my name is John Garvin. I'm the president and founder of Benicoltd Limited, an employee benefits consulting firm based in the far northwest suburbs of Chicago. We are pleased to present this video about HSAs as one in a series of videos designed to provide a basic level of understanding around employee benefit concepts and ideas of interest to owners and managers of businesses of all sizes. HSA is an acronym for Health Savings Account. To be clear, HSAs are accounts, not insurance. Under the Internal Revenue Code, one may set up such an account if coverage in a qualified high-deductible health plan is in effect. In other words, having a certain kind of insurance plan is what enables someone to be able to set up and contribute to the account, the HSA. Here are some important facts about HSAs. First, an HSA is triple tax advantaged. Money going into the account is either above the line deducted on one's income tax return or contributed pre-tax through payroll. That's the first advantage. The second advantage is that it grows tax-free while held in the account. And finally, it avoids taxation when distributions are made for qualified medical expenses. A list of the expenses deemed to be qualified is found in IRS Publication 502, which you can look up on irs.gov. Second, in 2012, anyone under the age of 65 with self-only coverage under an HSA qualified plan may fund up to $3,100 into their account, and those with family coverage up to $6,250. Anyone who is 55 or older may make an annual catch-up contribution in addition to these limits of $1,000. And all these limits are subject to indexing annually because of inflation. Third, employers may make tax-free contributions to employees' HSAs. Any such contributions are subject to the overall account contribution limits that I just mentioned. In other words, any combination of employer and employee funding of one's account may not exceed these overall limits. Fourth, all monies contributed to HSAs, whether such contributions are made by one's employer or by the account holder, are from day one owned by the person owning the account. Therefore, there is no vesting schedule like there would be with employer contributions that are made to a qualified retirement plan. Fifth, under HSA rules, one may either use the account or save it. In other words, there is no requirement with HSAs like you have with healthcare flexible spending accounts, FSAs, to spend the account prior to the end of the plan year or forfeit the remaining balance. In FSAs, that's referred to as use it or lose it. Sixth, with HSAs, one may only spend what is in the account. Conversely, the healthcare FSAs have a pre-funded account rule that requires one's employer to fund eligible claims up front up to the employee's annual deferral election, even if the money is not in the account to be able to fund the claim. Seventh, if funds are withdrawn under one's age of 65 for any reason other than qualified medical expenses, there is a 20% non-deductible tax penalty, ouch, in addition to the entire distribution being subject to income taxes. This penalty is waived in the event of one's death or disability. Eighth, once someone turns 65, the account may be used to generate income that's taxed at ordinary tax rates without a penalty, thank God, or continue to be used to tax-free reimburse or pay for medical expenses, long-term care expenses, Medicare Part B premiums, premiums on Medicare Advantage plans but not on Medicare supplements, Medicare prescription drug plans, Part D, and long-term care premiums. It is important to note there are no requirements to start withdrawing funds at the age of 70 and a half like that which are required under an IRA. Finally, HSA ownership may be transferred to an individual spouse upon death on a tax-free basis. That concludes our overview about HSAs. If you have further questions about HSAs or would like to consult with an employee benefits professional about how to incorporate them into your company's overall benefits financing strategy, please give us a call at 847-669-4800. We're really glad you joined us today, and we hope you'll take the opportunity soon to view the other videos in our series around employee benefit concepts and ideas of interest to owners and managers of businesses. Thanks, and bye for now.